Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway, brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Hey there, and welcome to another edition of Master of the Markets. I'm Barry Habib from MBS Highway. This is created exclusively for Mortgage News Network, and it's brought to you by our good friends at PRMG. They are working for your best interest. Last week, we got some really good housing data, and we also had a lot of things going on interest rate-wise. Now, you may recall we told you last week that this could be a good week for rates. We thought it would be a good idea to float. We thought yields can come down, and that's exactly what we got. Remember, we talked about the fact that we said, hey, on Wednesday, we're going to get the Fed meeting, we're going to get the Fed hiking, and historically speaking, yields tend to behave well. Bond prices do well because as the Fed chokes off inflation, bonds like that. So we saw exactly that happened on Wednesday. We kind of muddled through, got some benefit in yield, and then we said, hey, on Friday should be a good day as well because we're expecting tame inflation numbers. We got some clues based on PCE and CPI earlier in the month. So when the PCE, personal consumption expenditure, came out tame on Friday, bonds like that as well. Okay, so what's in store for the week ahead? Oh, you know what? Before I go to the week ahead, we did get some housing data that was really strong, both on the new construction side and on the existing home sale side. And once again, mortgage applications showing amazing resiliency. You have prices up year over year over 6%, and you have interest rates up almost 1 full percent, 93 basis points, and yet applications to purchase a home on a year-over-year basis were up 4%. That's showing a lot of underlying strength. And the numbers that came in from the housing area for August is where we got most of these numbers. They were still pretty darn strong. So as we head into this week now, looking ahead, it's jobs week. And this is going to be important because when we look at jobs week, the thing I want you to pay attention to this Friday is the weekly earnings. I know the media tends to look at hourly earnings, but hourly earnings can fluctuate, right? Weekly earnings is what you actually take home. Last time, 3.2% was the number. The bond market didn't like that at all. So if we continue to see increases in weekly earnings, that suggests wage pressure, inflation, and with the tight labor market, I'm a little fearful of that. So while I thought this week was a good week for us, and we'll take it, we may get a little bit more out of this, that 10-year treasury. Remember we said it's going to hit 3.11? Well, guess where it hit? 3.11. That was the top, like we called it. We said, hey, maybe it drifts down towards 3%. Right at 3% is going to be a difficult time for yields to breach. So I'm thinking that we may see yields back up a little bit towards the latter half of this week, especially because starting this week, there's going to be that final cutback of buying of bonds. QT, as they call it, on mortgage-backed securities and treasuries from the Fed will reach its greatest level, the final cut, and that's going to start this week. Every time the Fed's done that, we've seen interest rates move up a little bit, move away from us, pricing get worse for us. One other thing to remember, this time it even gets a little worse because the European Central Bank, they're joining in the fun as well, and they're cutting back their bond purchases starting October from 30 billion euros a month to 15 billion euros a month. The world's interconnected, so all things equal, this will likely suggest that yields move higher through the month. So that's why this was a really great period that we had of opportunity. I think it starts slowly. You won't see those effects immediately, but it should start to gain some momentum as we start to progress into the month. So for now, we're going to enjoy where we are. I think 3% is probably on the low side, but I expect us to challenge back up to 3.11 over the first couple of weeks of October. I hope you have a great day. See you next week. And if you haven't done so already, what are you waiting for? I mean, really, do you really want Zillow to take over your business and others to take over your business? If you don't have MBS Highway and you're not talking to your customers as an advisor, you know what? You're just a salesperson. You're going to be replaced by this, okay? You are. Same thing happened to travel agents, a lot of stockbrokers. It's going to happen in our industry. I'm telling you, I've been around for a while. I know this is the direction that it's heading. You want to protect yourself, you want to protect your family, be an advisor. The best tool to do that is MBS Highway. Get on it, protect yourself, make more money for yourself and your family. Talk to you soon.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS highway trial.
This is Mortgage News Network.